Good afternoon, everyone. Welcome to another episode of Living a Stale Purpose. And I'm B.A. Ingram, and I'm excited to be here with you as we continue our series on how to help retirees retire with more money. So just checking the stream, make sure we are good to go, and we're going to go ahead and get started. All right, good deal. Why are you afraid of losing your retirement savings? You're not alone. I tell you, I had this worry and I had this fear some years ago, but I've overcome it because I made some changes. But what if I told you there's a way to invest without the fear and that you could generate income, grow your wealth, and never outlive your savings without the stress? I like that part because I want to make sure I have more than enough to continue my later years in life and to enjoy myself. But most retirees fear running out of money, and I speak to them quite often about it. But today I'm going to show you how to overcome the three biggest fears that retirees have about investing and how to safely get started. And if I'm talking to people, one of the things that I find is that they have a lack of knowledge or understanding about the market, especially as we get older. And many people are afraid to go into the market and invest into the market because they're afraid they're going to be losing their money. But I want to help you with some of that today and as we continue this journey because many retirees hesitate to invest because of fear. And the fear could be real or imaginable, but it is real. But fear can cost you more than just a market crash. It can keep you from growing your wealth. As I said in my previous class, every day not invested is a dollar not earned. And I really believe that statement because every day that you do not invest, that's a dollar less that you could have made. I did something yesterday, it was kind of interesting, talking about a dollar. And I didn't prepare to share this story, but I'm going to share it since I was talking about a dollar. Monthly, I make trades. I buy new stock. I see how my dividend stocks are doing. I buy more of them, or I buy another one. And yesterday, I was buying a new stock, a new dividend ETF. And as I was doing that, for some reason, I had the wrong symbol in um, my Fidelity app when I went to buy. And it wasn't that it was bad. It was a similar stock, ETF stock that I was going to buy, but it was a higher growth stock, which means it had more volatility, which means it paid less than dividends, and it also had a higher risk because of what it was invested in. And when I realized the mistake that I had made, I said, oh my goodness, I bought the wrong one. Not that that's bad, but it wasn't what I had planned, nor was it on my plan of stocks to buy at this time. Now, later on, I will because I keep a list of what I want to do now versus what I want to do a year or 5 years from now, and I do that accordingly. And this was a future stock that I wanted to buy, but I got the ticket symbols mixed up and I bought it a little early. Well, as I realized my mistake, I said, oh my God, I got to sell this and I got to get the one that I really want. Well, talk about a dollar earned. This is the kind of the crux of the story. When I sold it, I actually did make $1. It was quick because, like I said, I kind of jumped in, I jumped out. I'm not recommending you do this. I'm not a market timer, and that's not what I do. But I know there are some people that do it. But as I said, fear can cost you from, greater than what a market is doing based upon, if you decide not to do it, that's a dollar less earned. Well, I did make $1 off of that trade and went on and got the right one that I was supposed to get and wind up getting it for less than what I had wanted to get it, which was great. So I was able to buy more shares of that particular stock. But I thought it was really comical because I actually earned $1 during that short minutes of buying and selling. Now, had I kept it longer, I probably could have made a few more dollars, whatever, but that's not the point. The point is, it was a dollar earned. So that was an example of a day invested, I made $1. But fear can keep people from doing that, and it keeps you from growing your wealth. Today, I'm going to tackle those fears head on, and I'm going to give you some real solutions toward them. And I hope you're going to pay attention. Most people, and I thought this later on as I got back into the trade game, I thought, well, it's a little too late. I shouldn't be jumping in right now. I shouldn't be doing that. I should just let my money ride, do what it needs to do, and just call it a day. But I enjoy what I'm doing. I love what I'm doing, and I love seeing my portfolio gain dividends every month and every quarter. And so many people think I'm too old to invest. Let me address that fear. Number one, I'm too old to invest. I had a conversation yesterday with a young man, and one of the things that we agree upon is that it's never too late. The truth of the matter is, it's never too late to invest. Investing is about strategy, not age. And as I said before, if you implement the right strategies, you understand what you're doing, you get educated on what you're purchasing, you know what it's going to do for you, you know what it's going to pay for you. That's a strategy. And that strategy can help you gain, even though you may think that it's too late in the game for you, it's later on in life, because it's never too late. Investing is about strategy, not age. And the solution to overcome this fear is, number one, is to focus on income generating investments like ETFs and REITs. This is why I'm a big proponent of them, because if you focus on income generating investments like ETFs and REITs, then you're not going to lose. You're going to continually and consistently gain the dividends that the companies are paying you on those stocks that you buy. That is the wonderful thing. So although the market may be doing this, your dividend is doing this. It's in continuing to pay you out at a consistent rate of return every month or every quarter. And so that's why I'm a big proponent of that. Fear number two, what if the market crashes? Well, the truth of the matter is, markets always move up and down. If you had any or taken any time to watch the stock market, or what they call the Dow Jones, and you see the little symbols going up and going down, that's the market movement doing what it does. And that's normal. That's normal activity. People jump in, people jump out, shares go up, shares go down, people make money, people take losses. That's just the market doing what the market does. And so there's no way to avoid that, okay? The solution to that is to invest, as I said, in diversified ETFs to reduce that risk. Because when you invest in diversified ETFs and REITs that pay you a consistent rate of return, you reduce that risk of that up and down flow of the market, because the company has already agreed to pay you X amount for every share that you own. And so you invest in dividend diverse ETFs to reduce that risk of worrying about the market crash. Many, many years ago, when I got into the market, I was concerned about all of that up and down and movement. And so it kept me from focusing on the long term goal. So I would just give my money, make it cash in, cash out, move on, do it again, put it on rinse and repeat and go. But I didn't stay in there long term to build anything long term. And so after starting all over again, I realized that this is a long term game which requires a strategy. And so I need some diversification that reduce that risk but pay me a consistent rate of return. And so I began becoming a believer in ETFs and REITs. Fear number three, I don't know enough about investing. Well, truthfully, none of us do. Even experienced investors are still learning. They know enough about what they're doing for what they have and what they're purchasing. But any new investment that you're going into, there's research that involves. There's data that you have to pull. There's stock market reports that you have to look into. So it's not about you becoming an expert about all the investment things that are out there. The truth is, you don't need to be an expert to begin investing in ETFs and REITs. You start small. You start small. You use automated investing tools, you use research tools, and you learn as you go. And then you get people like me and others who are out there that share this information, share this knowledge, share this education to help you along the journey. And when you partner together with us, we go through it together and we learn and understand together. But be willing to start small. Here is why. When I work with people, I encourage them to start small. I show them my smaller portfolio. Well, I only invest $25 at a time, $100 at a time. And we work with that and we watch that grow. We research what we're going to buy. We buy it and then we watch the dividends come in on it, and then we increase it as time go on. But be willing to start and start small. Okay? Because as I said, Every day not invested is a dollar not earned. And some of the common questions that come about when we start talking about some of this stuff is, well, what if I don't have a lot of money to invest? That really doesn't matter. You can start as small as $25 a month, $50 a month, $100 a month. And with ETFs and REITs, it is set up to where if you can't buy a full share of it because it may be more costly than what you're investing, you can buy fractional shares, which still allow you to own a portion of the share of that stock. And then you continue to add to that. You buy a quarter of a stock, a half a stock, a full share of a stock, and then you just continue to add to that. You can start with as small as amount as you can afford, but the key is to get started. Another question is, how do I know which ETFs and REITs are safe? Well, as I said before, you always have volatility in the stock market game, but you look for low fee ETFs and well established REITs. And I look for what they call, the godfathers of the stock, those that have been around for 50 years or more, those that have been consistent payers of dividends, consistent returners of revenue, and I look for those, and there's a list of those available out there that will share with you and let you know how to do all the research on it. But when you look for those that have low fees, that way the brokers aren't getting all of your money and fees every time you make a trade. And then you look for well-established companies that are ETFs and REITs to invest in. Because what happens if I need more or need my money back? Because most people say, well, I may need to do something with my money, or I may need to make a large purchase, or I want to go to school, or I want to buy a home, or whatever the case may be. What happens if you do need your money back? Well, the great thing about ETFs and REITs are they are liquid investments, which means you can sell them anytime. As I did yesterday, I was able to quickly buy and able to quickly sell, and then able to buy again, and now I'm holding. But they are liquid, so you can buy them and you can sell them back, and they become liquid, and then you can withdraw that money out of your account. If you're 59 and a half and older, you can withdraw without any penalties. You only pay taxes on the gains that you have made, not your initial investment. So you can withdraw your initial investment 100% tax free. And then when you're 59 and a half or older, you can start drawing from the dividends as well. So you can always get your money back, and it doesn't take a long time for that to do once you set up your brokerage account the correct way and everything is in place. So I'm not going too deep, as I said before, in these courses. I'm going to keep them short, 5 to 10 minutes, just to give you tidbits, because I'm going to be on here every week sharing this as we continue to build up to hopefully to where you are ready to take the plunge into this. And if you're ready to take the plunge and start investing with confidence, I want you to sign up for my free Unlock Your Freedom webinar. And the link is posted down in the description below, baingram.com/unlockyourfreedom. And that's a free 2-hour webinar that explains in detail what I'm sharing with you over the next 6 weeks. And then it allows you at the end of that webinar to sign up for the 3-day hands-on workshop that we did that actually walk you through how to do everything from setting up your brokerage account to researching your stock to making your first investment, and then to putting that on autopilot. So I hope you will sign up for that course. Take that webinar free. Begin learning and begin coming to take this journey with me. I want you to follow me for more simple investment tips, and I hope that this has been helpful for you today and that you're going to get started. Because remember, every day not invested is $1 less earned. And we want to make sure at this age that we are maximizing our retirement dollars and we are gaining revenue even when we sleep. Okay? So thank you so much for joining. Look forward to seeing you next time, and I'll be back again next week, same time. Take care. Until then, God bless and bye for now.